Hello traders, welcome to my channel, and today we're going to talk about some liquidity concepts. And liquidity concepts are very important in the forex market because it's a financial market and money has to be made, and sometimes money is lost. So these concepts will help you to make well-informed trade decisions even though they do not predict the outcomes of the trade, but they can help you make trades that are high probability and might give you some profit. So, what we're gonna talk about firstly is gonna talk about the trend line liquidity. So, with the trend line liquidity, as you can see in this chart, um, can see prices making lower lows and lower highs. So, every trader is gonna draw the trend line and think, okay, price is more like moving in a form of a channel. So, when price gets to a certain point, it's going to bounce off. So price came down here and then it bounced off the trend line, came up here, bounced off. So I'm gonna make an entry here because and they'll say I have two touches on the trend line. So I'm gonna make a buy decision or buy entry here so that I can make some profit. And with this, the financial institutions, they're looking for places where they can put in their buy or sell positions. And market makers and brokers are also looking for places where they can make money from retail traders. So when you see this trend line, you see normally what follows is that price will make a certain turn, price will suddenly reverse and then make an out move, clear the orders in the trend line and probably continue going down. So these are some of the ways that market makers or financial institutions use to grab money from retail traders. So you can see price suddenly make an up move. Most traders who are buying are taking out. Traders who are also selling are taking out. Traders who are also holding positions from this very high are also taking out. So this is an example of trendline liquidity. And I'm also gonna talk about another thing, which is what you call the equal lows or strong support or resistance areas. So here we have something like this. Support and resistance traders are gonna think this is a strong support area. So when price comes here, I'm gonna buy. And sellers are also thinking price is gonna break down. So traders who are looking to buy have their orders somewhere here with their stop loss under these lows. And traders who want to sell also have their their sell orders right here or their stops, I don't know, somewhere here, looking to take a sell trade. So what will happen is that price will suddenly drop low, as you can see here, and then price will reverse. So those who are seeking to buy, who have placed orders to buy this at this price, are taking out because they have their stops below this low, and price went below it. So their stop loss has been hit, and others who are seeking to sell and have their sell positions here, they have their sell trades initiated and then the price have moved to the upside. So either their stop loss are hit or they are in deep drop down. So this is another way that market makers also or the banks use to grab money, or they put in their orders for their trades. And there is other ones too, which is the double bottom and the double tops. So with that, price makes a low, price makes a low. I'm trying to get the arrows, and then so it's something like this. So price makes a low, then makes a high, lower high. So we're thinking price is going to make lower low, of which price does, and then price reverses. So with this same pattern, retail traders normally put their stops at the retail traders normally put their stops at the lows and then at the previous highs. So as with the previous ones, traders who are seeking to sell and have their sell orders below these previous lows have their trades initiated, and then price their orders picked, and then price has gone the opposite way. And also looking to buy and have placed their stop losses under these previous lows have their stop loss hit, because they'll have their stop loss somewhere down here hit. So price reverses, and then they've grabbed both buy side liquidity and then sell side liquidity. And another one too that is also common is what you have the equal lows and then the equal highs. It's the same as the support and resistance instance I gave, where price hits a certain zone or certain area twice, and then we think it's a strong support and resistance area, and so we can place our stop loss below it or above it, depending on if you want to buy or you want to sell. So you're gonna put your stop loss below it or above it, and you realize price will just go below it, and then you have your stop hit. So these are some of the things that will help you in your trading, so that you can make well-informed decisions. And then when you see such moves in the market, you know that liquidity has been grabbed, or liquidity is being um, made in the market, so that the financial institutions can take in their buy or sell positions. So you watch out for some of these moves in the market, and then you can make well-informed decisions. If you want to buy after you've done your analysis, and then you think price is going to go bullish, you look at some of these scenarios being played out, and then you can know when to enter the market to make some profit in the market. So this is what I have for you today. Thank you, and have a profitable week.